you're always buying at a discount, right? You're always buying everything at a discount rather than like, oh, let me buy Apple at 140 because I think it's gonna run from here, right?
Right.
You could just day trade it. You could day trade it, make your daily gains to keep your portfolio trending in the right direction, and then that you can make that big jump.
Yep.
When the market really starts selling off, buy these assets at a severely discounted price and swing it from there, or invest it from there. And
Exactly.
it's just an efficient way to do it. You don't feel rushed to get into the market because you're day trading it every day, right? Swing trading, whatever it is.
Exactly. Exactly. And look, let me say, like, let's use Apple as the example. Let's say you really love Apple and you want to be an investor in Apple. If you liked Apple 2 days ago or a couple days ago when it was at trading at 140, you should be loving Apple now that it's trading at 123 because you can get it in at a discount, right? So from a investor and swing trading perspective, you should love these pullbacks because these pullbacks give you an opportunity to buy back in at better prices. But with that being said, let's kick off our pre-market analysis. Good morning to everyone that's still tuning in to our live trading room, and good morning to everyone tuning in on YouTube. Let's go ahead and smash that like button and subscribe button so you can follow us every single day for that free content that we provide. And today, the market is selling off. It's the same theme that we were talking about yesterday. The 10-year yield is at top of mind. Inflation concerns is at top of mind. And you've got Jerome Powell, the chairman of the Federal Reserve. He's going to be testifying in Congress today at the Senate Finance Committee, if I'm not mistaken, at 10 a.m. Eastern. That's going to be a very important hour for us to keep an eye on and to follow because his comments can move the markets, right? So right now, the theme is this. Tech names are getting clobbered in the head. Why? Because here's what Wall Street was doing when they were rallying tech stocks. They were valuing tech stocks based on the low interest rates and practically zero cost of capital that you can borrow against to justify the valuation of their free cash flow, right? For companies like Apple, NVDA, Microsoft, etc. That's why the valuations ran up so much and the stock prices ran so much. But when you have interest rates rising, it literally just defeats the whole argument for their thesis as to why the valuation should be even higher. So that's why tech stocks specifically are getting hit really hard. Yesterday, we shorted the NASDAQ. We made money shorting other stocks. Today, it's going to be the same thing. And also, another theme, we've got Bitcoin and Ethereum and just the crypto market feeling a lot of pressure. So those names are going to be in play as well. So just right with those two things, let me transition off to the two names that I like. The NASDAQ. I'm going to be watching the NASDAQ very closely. We're currently trading below its 50-day moving average on the daily chart. That's sitting at about $319. It's trading at $317. If the QQQ, the triple Qs, if it fails 316.30 around that area, I'm going to go in for some puts. I want to test 315.37. Why do I want to test that number? Pull up a longer term chart. You'll see that on January 29th, the low, actually 315.35 is how we opened up the year, right, with the NASDAQ. Okay, so if we fail that number, the NASDAQ goes negative on the year. Then I want to test 313 area. Why? Because that's the low from January 29th when we had that small mini correction of like, or I'm not even going to call it a correction, that small mini pullback of like 2 to 3%. If those two numbers don't hold, guys, we are coming down hard on the NASDAQ. And I'm not saying it's going to happen in one day. This could be a multi-day process, multi-week process. We're clearly on a downward trend, and we're going to play with that trend. So those are the numbers that I'm looking at and the key levels I'm looking at for the Qs. Mara. I like Mara a lot. I like Mara over Riot because I can short Mara with equity. So if Mara trades above $32, I'll go long, put my stops at 31. Plain and simple. If Mara breaks 31, I want to test 30.50 and then I want to test pre-market lows, 29 bucks. Here's the thing though, we've got to watch Bitcoin and put the charts next to each other, because if Bitcoin rallies, Mara's going to rally. If Bitcoin sells off, Mara's going to sell off. So I'm going to watch those two very, very closely, and Mara is definitely going to be on my A list for today. Another name that I'm definitely going to watch today is CCIV. All right, so CCIV, the Lucid Motors deal is confirmed, but guess what? The investors, the institutional investors, got the deal at 15 bucks per share, while you and I were trading it at $60. So, with that being said, guess what's going to happen? The stock is going to come back down to 15 bucks, guys. At the minimum, I see 20 handle on, CCIV. So, I'm going to short CCIV today. It might get a pop, might get some short covering, but then I want to see some curling over and just watch this thing dump, right? So, we saw this type of action, guys, with Tilray, with GameStop. Look, I have the daily chart open right now. Just 2 days ago, guys, the RSI was above 80, and it was trading like 5 points above its upper Bollinger Band. And then we get the news. Now we're trading at the daily 20 MA. Let me tell you something. If CCIV can't hold 36 level, we're dumping it to like 32. So that's what I'm looking at, and CCIV is definitely going to be on my A list. I'm going to stay hyper focused on CCIV because I know I'm going to nail the shit out of it. So, and excuse my language, but I'm just pumped today. PLTR, going to keep that on my radar today. Why? It's an overvalued stock. All right, the PE, the price to earnings ratio, is really high, and it's going to get punished. I know Kathy Woods is buying the dip. Let's see if she's right. If it doesn't hold 25 bucks, which was the support that we saw, 2 days ago, 3 days ago, this thing is screwed. If it doesn't hold 25, guys, we are coming down hard on it. I think let me see here. I have the daily chart opened up. If we don't hold $25, 22 to 23 is coming. So, that's my call on PLTR. If it fails 25, we go straight down to 22, 23. All right. So I'm gonna be definitely playing PLTR. Merrill Edge allows me to short it, so I'll go in short with size on this one, make some bank. You can also play with put options, and if it rallies, then we obviously play it long. But I do have a little bit of bias today. However, my bias won't cloud my judgment. If market starts to rally, I'll obviously go long stocks, and we'll make the appropriate call. But that's just what I see today. Some of the names that I really like, I'm going to keep a very close eye on NVDA. The reason why is because NVIDIA, the price to earnings ratio is really high. If tech continues to sell off really hard, oh baby, I'm going to short NVIDIA. So I'll short NVIDIA if it breaks 560. I want to test that 555 and break it, right? So that's my target. If the market starts to rally, NVIDIA would have to rally above, like 567, 568 area for me to want to take it long, probably to gap fill it. That's if the market starts to rally. Another name that I like that is overvalued, that has just been a high runner, is Futu. Futu closed yesterday at 174 and change, gapping down about 6 to 7 points. I'm going to keep a very close eye on it. If Futu fails the 162, 163 area, I'm going in for the short, putting my stops at 165. My first target on Futu, 160. Now, if Futu decides to rally, I'll take it long if it rallies above 165, 166, put my stops at 162. And, we're going to have to play these levels. So like 168, 169 will be the first target, and then 172 will be the second target. That's what I'm looking at for Futu. But of course, market's very weak. I do have a little bit of a bias. Last name I'm going to bring up is Tesla. Guys, when Tesla announced that they were going to join the S&P 500, it was trading at 650 bucks. Look at where we are now. 668. We're literally back at where we were when it announced it was going to join the S&P 500. The volatility is insane. This stock was at 900 bucks, almost 900 bucks just 2 weeks ago. Look at this pullback. Look at this daily chart. It broke that trend. Broke it. I mean, let me adjust this to put the 50 MA, and then I'm going to pass it on to Taj. Oh, Jesus. We broke the 50 MA 2 days ago. 770. So, let's see where the 100 MA is at. You know, we have to constantly be looking for support zones. Okay, 100 MA is at $619. I mean, look, if the market really wants to sell off, we could visit that point, but I do see a couple of things here. The daily RSI on Tesla is at 28. It's below 30, so it's getting oversold. And the lower Bollinger Band is at 771. So we're trading 6-7 points below that lower Bollinger Band. I do think that we could get a bounce on these sell-offs, but sometimes, guys, these sell-offs are so hard that those technicals sometimes don't even matter. So we just got to follow the charts, follow the trend, and make the appropriate trade. So if Tesla can reclaim 673, I'll go long, and first target will be 680. If Tesla just continues to dump, we can go in for some puts, and the first target will be pre-market low of 650. If we break 650, my goodness, I have no idea where we'll go. So we'll just enjoy the ride down. So with that being said, Taj, let me pass it on to you, bro.
Yeah, I think one thing that's going to be nice today is everything's going to be volatile.
Yes.
Everything. So one thing I'm going to watch is Apple. I'm going to keep an eye on Apple because Apple broke a key level yesterday. And this is going to be consistent across the board with pretty much any stock that I bring up. We talked about it yesterday that yesterday was going to be a very important day as far as which direction is the market going to choose. Are we going to bounce off these support levels as we've been doing on Apple for, we did it on Thursday. Back here in January, we bounced off this key level at 127. Yesterday, completely gave it out. Closed below 127, right at 126. And now we're gapping down 3 points on Apple. So the way I see Apple, it starts to break below 122.70. We can look for a short. We can throw our stops around 123, 123.30 if we want to give it a little more wiggle room. But if the market starts showing some weakness out of the gates, we can definitely look for a short. Test that pre-market low of around 121.58. And if it breaks that pre-market low, there's really no support until 120. So we have plenty of room to the downside. This will be the first day for a lot of names trading outside of its Bollinger Band, so it still does have move to come down. So I'll definitely be keeping an eye on Apple right out of the gates to see if it can break that level. Another one that I'll be watching is PLTR. Alex already went over that. But, one thing I just wanted to bring up from yesterday is we talked about PLTR. If you were swinging it, it actually wouldn't be a bad idea to, look to take profits yesterday because it was running into that daily 8MA, right? Mm-hmm. And that serves as a resistance, especially on a short-term trend. And what do we have happening today on PLTR? Or yesterday, it completely rejected it, right? Mm-hmm. Hit a high of 30.19, closed right at the low at 28 bucks. And now we're gapping down 2 points from that level, which is very, very close from the recent lows of the year, right? PLTR 24.50. If it somehow breaks that level today, the stock's in deep trouble. Mm-hmm. No real support until 22.50. So I'll definitely be keeping an eye on PLTR as well. Another stock I'll be watching, one of my favorite stocks, NEO. NEO, again, in the same boat. It was really struggling here at 54. Remember Thursday, it caught a nice bounce right at that level. We thought it was going to sell off there, but it caught support. Friday, bounced up a little bit, but still fairly weak. And then yesterday, completely gave it out. Opened at its high, closed at its low. Pretty big bar, decent volume coming in on the day. And now NEO's gapping down 4 points from that close of yesterday. That's nearly a 10% move on the stock. And it still looked like it wants more continuation to the downside. There was a bear flag forming right here. It actually just broke on this candlestick that just opened. So we are going to have to give it a little more time. But if it starts to break below 45.36, we can definitely look for a short. There's really no key support levels until around $42. So there's a lot of potential for the stock to continue on the downside. The RSI is at 37.49 from yesterday's close. I'm assuming it's probably closer to 30 now than it is further away. So we'll have to really be patient and wait for the best opportunity. I would love to see a lot of these names get an initial bounce out of the gates and then look for a short. That would be my dream scenario. But who knows? Maybe it'll just sell off right out of the gates. But let's definitely wait for that opportunity for an entry. So as of now, Neil, I'd look for a short around 45.36. You will have to give your stops a little room, about nearly a point, around 46.30. You would have to place your stops at. So like I said, let's probably give it a little bit of time to find some support and then look for a short around that area. Also, I'll be keeping an eye just on the overall market, the S&P. S&P is not as weak as the NASDAQ. The NASDAQ is extremely weak if you compare the daily charts. However, the S&P is, slowly coming down. If Jerome Powell comes and testifies at 10 o'clock and says something the market doesn't like, keep an eye on the SPYs. This has plenty of room to the downside as well. There really is no big support areas until around 369 area, and now we're breaking the daily 20 MA. So if the SPYs really start to break down, we can look for a short right at the low of day, 383.69. We'd have to throw our stops at around around 384.50. So there is a bit of room on it, about $1. But there's plenty of room downside to the SPYs if the market starts to sell off. I think the Qs are better initially just because there's obviously more pressure on the tech sector. However, again, if Jerome Powell comes out and testifies and says stuff that the market really doesn't like, you're really going to see some pressure mount up on the SPYs. If you look at SPYs over a span of the past 2-3 weeks, we've been fairly choppy. Right, Alex and I were talking about this in our Facebook Live session, that it seemed very heavy, right? The SPYs would hit an all-time high and wouldn't really take off. It would push up a few cents, push up maybe $1, but then kind of yank back down. There was really no continuation to the upside, and that just means there was a lot of pressure. There were paper hands up here, looking to not really buying the S&P at these levels. So now you're starting to see the results of that. The result is, as soon as something starts to come out, as far as the bond market, the 10-year yield being at the level that it is now, you see the SPYs start to really suffer. Jerome Powell comes out and says anything the market doesn't like, you're going to see more pressure added on the SPYs. So we'll start to see that short-term trend, start to come back down. So one last name I'll be keeping an eye on is also just some of the names that have been very hot lately. Haven't really felt the wrath of the overall sector, and that's names like Snap and Twitter. These names have been hitting their all-time highs. Snap actually just hit an all-time high yesterday. Twitter hit an all-time high on Friday. And the main reason I'm going to keep an eye on this is because they're not as beaten up as some of the other names, the Apple, the Microsofts, the Qs, right? They're a little more fresh as far as the selling pressure goes. So I really just want to keep an eye on it because I think there's more potential for this to really come down if the market starts selling off. So with that being said, for Snap, it has been very choppy in the pre-market session, but it is down about 2 points from yesterday's close. And really no support until around $61. So the way I see it, Snap starts to break below $61, we could potentially look for a short. Sorry, I had to sneeze there. Short around $61, and then maybe throw our stops around $61.50 for the Snap short. For Twitter, we could look for a short potentially around $68.50. Throw our stops around $68.80, $68.90. And look for that initial flush. Twitter is, it tried to find support off the 8 MA yesterday and completely got rejected, closed right near its lows. And now you're starting to see the stock dip below the 8 MA. In the 20 MA is isn't until $60.50 from yesterday's close. There's a gap to fill right here, around 63 bucks. So Twitter has plenty of room to the downside. This is going to be a name that I'm going to have on my B-ish close to A list. So definitely just keep an eye on that. The Qs start to feel the pressure of the market overall. But with that being said, that's gonna do it for my watch list, man. I'm gonna also be just keeping an eye on the bonds.
Nice.
We almost hit 14. We hit 1.386. So if you see that thing continuously trend up, you're gonna see the market start to feel some pressure as well.
Yeah. The closer we get to 1.5, we're in trouble. We're gonna see the markets.
Alex, I think your mic's muted. All right. Well.
Yep. You are correct. Sorry, I was muted. Yeah, I think you said it best, man. So the closer we get to 1.5, the more pressure on the market. So with that being said, for everyone on YouTube, thanks for tuning in, guys, and we'll see you all tomorrow.